what happens when you raise implied volatility expectations is curves get flatter and wider as they incorporate more of those potential outcomes into and underneath the fold of the curve. We'll talk about that. But higher standard deviations are going to be commensurate with higher implied volatility numbers. This can be really helpful when you're trying to build an expectation of movement or build a risk profile in your head as to why and how far away from the mean has this movement taken me. It's going to help you in being able to build that framework and understand the risk of the actual asset that you're trading. So let's talk about the normal price distribution and what these standard deviations actually mean. As you can see here, when I look at the mean, which is right in the center, like we just talked about, that's the center of this actual data set. 68.26% of the time, statistically, any random number is going to fall within one standard deviation of the mean. So 68% of the time, roughly, if you were to just pick out a number and say, you know, this is a random number, 68% of the time, theoretically, if you're following a normal price distribution, it's going to fall within one standard deviation on either side of the mean. That same except the number is greater. 95.44% of the time, you're going to find that random number that you pick is going to fall within two standard deviations of the mean. And then 99.72% of the time, that random number that you pick is going to fall within three standard deviations of the mean on either side. That's what I mean when I talk about what does this framework do for being able to manage risk. You can think about these events. You can think about the way things are moving within the framework of standard deviations away from the center of your data set. How unlikely or likely is this scenario? And so when you think about standard deviations and you think about risk, I want you to think about three standard deviations as a pretty big move away from the mean relative to where things are currently. And what we're seeing right now is that you're seeing these events that are continuing to happen over and over again, and they are actually more than 1, 2, or 3 standard deviations away. These are